So let's talk about what the best markets are to day trade, especially when we're trading the morning move here at Trading College. We're looking for that London volatility. Anytime from 7 a.m. to 9 a.m. we're at our screens looking to make our day's money, often with our shorts on, our summer t-shirts. We want to, our goal is to make the money and go and enjoy it the rest of the day. But what markets are the ones that are best to trade? Because it's important that you do get the right market, because you don't want to be frustrated by getting stopped out of trades. Now, my advice for complete beginners really on this would be, make sure you trade with something you feel comfortable with. And now the German Dax, for us more advanced traders, it's a great market to trade in the morning. You see, we had a lovely short signal this morning, red PTS all the way down here, and it moves fast. Stop placements can be 25, 30 points if you're lucky on some of these volatile moves. So it might not be right for a beginner because it moves really fast, but the profits are really quick as well, so we can't have it all our own way. And if you're going to get stopped out, normally it's the German Dax where you find out quickly that you've been stopped out of a trade. So the German Dax, it's a great market to trade if you're more experienced. It really is, because as I said, you can get some really good profits really quickly. This is a very nice move on the short side here, all the way down, 50-point move, £10 a point spread bet account. You've done 500 quid in 45 minutes to an hour. You're done for the day. You've made your day's money. But as I said, it can be very, very volatile indeed. We got a beautiful buy signal from this area here, went from red to green. This market rallied. I mean, it's gone up nearly 100 points. What a day it has been. But let's stick on the subject. Look at the FTSE, because I think the FTSE, if you're looking for an index, the FTSE is nice and slow. I know you need the volatility, but stop placements can be like 12 points away, so you could up your position size. If you up your position size, you can, when it goes on a nice move, then you can make more money, and so you're going to get to your financial goals much quicker. It's a steadier market to trade. Sometimes it can be really boring, especially in the doldrums, which after 10 o'clock it can become very slow indeed, so you don't want to be trading that. But it's consistent. It gives you nice signals. And okay, it might not give you 100 points like the German Dax, but you can up your position size and still manage the same amount of risk. If you're trading, if you want to trade FX pairs in the morning, which are great, you want to be using, the euro, the sterling markets, the pound versus something, okay, or euro sterling, because obviously these European markets are impacted with news in the morning time, and you get those signals. Now the euro for me can be really boring, and as a trader, I don't want to make it harder for myself to be frustrated and get into these trades and it just goes sideways. It is the most traded currency pair, especially in the European session. But for me, it just doesn't give me enough. It might do in 3 weeks' time, okay? But at the moment, volatility is really low. So I turn to the British pound on this, and we get some better moves on the British pound. We can get 20, 30 points out of these trades, okay? Now, another market that does like to move in the morning is oil. But once again, you've got to be careful. If you're using a spread betting account with crude oil, spreads are a little bit wider. Even though when I first started trading spread betting accounts and commodity market like oil, it was 8-point spread. Now they brought it right down. So oil has some cracking moves. Now, I always believe that if you've got a spread around 1 to 2 points, as long as that market has decent size volatility moves, you're going to get into profit quite nicely. But if you've got a spread on the euro dollar that's 1 point, which it normally is not, it's 0.4 or 0.6, then it's okay if it's only going to move 9 points because the spread's nice and tight. But take into consideration, if you're using a market that's got a decent spread, as in a wider spread, you want it to be quite volatile because you want it to move away and want it to be in profit quite quickly, so it eats up that spread. Okay, now things like Aussie Swissy are quite random, really. I mean, this is the Australian market versus the Swiss franc. It's not the European market currency pairs, but they have decent moves. And I would go up bigger time frames with the Aussie Swissy. I'd use maybe a 4 hour, 1 hour time frame and get some nice consistent intraday swings. Where if I'm trading the German Dax, you know, I'm down at the 5 minute, 2 minute time frame with my anchor charts much higher than this. Okay, so getting that balance, depending where you are as a trader. If you're a brand new trader, watch out for that Dax. It gives you great profits, but you've got to get your eye in, and you've got to be comfortable with that volatility, and it makes money really quickly. You just need training. That's all you need, guys. You just need training. You need that subconscious mind kicking in and seeing this happening every single day. But you can certainly make some very nice profits on the German Dax, and make this a career for yourself. Okay, and enjoy the trading. I love it. Speak to you soon. Take care. Bye bye.